Hey, what if the real reason your company isn't growing faster has nothing to do with the effort, but everything to do with the strategy? See, a lot of businesses hit a product market fit and see early momentum, but then growth suddenly stalls. The instinct is to add more marketing, more offers, more tactics, but the approach often creates complexity instead of progress. In this episode of Profit with a Plan podcast, we're talking about why many growth stage companies get stuck in the mindset shift that changes everything: growth by subtraction instead of growth by addition. And today you'll hear how to build a real growth plan before jumping into execution, why comes before tactics if you ever want your company to scale to be strong, and a cash flow asset. So join me on today's Profit with Plan podcast. Hey, entrepreneurs, are you working too hard for too little profit? Well, welcome to Profit with a Plan podcast, where we help you scale smarter, increase profitability, and build a business that's worth more, whether you keep it or sell it. I'm Marcia Riner, business growth strategist and the profit booster behind Infinite Profit. I've helped countless entrepreneurs to turn their businesses into highly profitable and sale-ready assets, so they enjoy more income now and a bigger payday later. So join me for practical strategies, expert insights, and proven steps to make your business more profitable, more valuable, and built to last. By the way, today's episode is sponsored by Infinite Profit, where we don't just talk profit, we deliver it. And before we dive in, I've got something special for you. If you're tired of that flat revenue or that marketing that just doesn't seem to pay off, try my new Profit Booster Growth Map. In just a few minutes, it'll show you exactly how to bring in more qualified clients and plug those profit leaks that are eating away at your cash. Go get it for free at profitbooster.biz and start turning missed revenue into real money. All right, let's jump into today's episode. My guest today is Yarin Gaon. He's an entrepreneur turned investor with a long track record of building and scaling companies. Yarin launched his first business just at 14, and no, it wasn't a lemonade stand. And he built into the Israeli's largest e-commerce platform for military goods before successfully exiting the company. After relocating to the US, he served as an entrepreneur in residence at a venture capital firm, where he focused on helping distressed startups stabilize and grow. Today, Yarin works closely with founders of growth stage companies, helping them turn promising businesses into strong cash flowing assets using the same strategic framework the private equity firm relies on. He has mentored over 400 businesses through SCORE and the University of Chicago's Polsky Center, and he's passionate about giving founders access to growth playbook that are usually reserved for elite investor networks. So welcome to Profit with a Plan, Yarin.
Hi, Marcy. I'm happy to be here. Thank you for having me.
Absolutely, I love it. I'm super excited to talk about this. Planning is always in the heart of my soul, and I find that a lot of business owners get trapped in planning. So having this kind of conversation of planning, turning it into execution the right way, I think is going to be
Yeah,
super interesting.
I'm excited. Planning is usually a nice to have activity, something you do maybe once a year, if you're maybe once a quarter if you're running on EOS. But at a certain point, it becomes the highest leverage activity you can do. So before you spend your capital or your effort or your energy, pause and plan, and you'll be much more successful. That's at least my frame of thought. I think you share the same.
Exactly. Hence, Profit with a Plan is the
That's
name of the
right. It's in
podcast.
the title.
I know. It's great though. So why don't people plan? I mean, I think that's the thing is they go running and chasing squirrels and shiny objects, and they don't really step back and go, how's this gonna work? And what am I gonna, what am I gonna expect out of it?
Yeah, it's a really interesting question. Why don't people plan? They know conceptually that they need to, but it's always get pushed to the nice to have when we have some time. And there comes a point where if you don't do it, it becomes very expensive not to. Why? My thinking is that a lot of founders build their businesses using hustle, right? They are in hustle mode. I want to do
And they
more.
wear it like a badge,
Yeah,
right?
it's
They're
like
like,
I'm a
yeah, I
hustler.
hustle.
And it's great. And hustle is a great tactic. It's also a great strategy for a certain size, right? As you start, it's all about action. You want to take action. You want to see what works. You try different products, different type of customers. You say yes. You chase opportunities. And there comes a point where business grows and you found that initial, what we call product market fit, where you have some paying clients and things are working, where this hustle mentality is actually hurting them
Mm,
because we'll talk a little bit more about growth by addition and growth by subtraction, but they keep applying the mindset of let's do more products, more clients, more lines of services. And as business grows, it becomes harder and harder to actually manage. And because you're growing, but you're still relatively small, you actually become mediocre at everything
mm.
you do. So it dilutes your effort when you try to do too much. Does that make sense?
1,000%. So many people go chasing, well, hey, they're doing this, so we have to add this to our books. And I think the problem that I think happens that they don't realize until they're underwater with it is that they keep adding to their plate, but they don't necessarily have the structure or the ability to scale to manage that. And then they're working 60 or 80 hours a week trying to maintain that more factor, which is
Ye-
terrible.
Yes.
Terrible, terrible.
So what do most founders do at that stage? They turn into fixing operations, right? They
Mm,
feel like I'm working 60 hours a week, something in my operation is not working. I need to put more processes in place. I need more SOPs. I need to put EOS in place. I need better meetings. They don't think to themselves, maybe I'm just doing too much. So not
mm,
managing what is, but thinking, okay, what of everything I do, right? Profit is an average, right? It's an average of all of our activities. Some add a lot to profit, some actually take away from profit. That
yeah.
planning, that pause that needs to happen at some point where you decide, okay, so what am I spending my time on? It's not just me as an individual, but now there's a team, there's a business. Is the missing piece, right? They try to fix it with systems, but it's not a system problem, at least not at that stage. It's a
Right.
planning problem. It's really a priority problem.
Mm.
Planning is a byproduct of setting priorities. It's what are we doing and what are we deciding that we're not doing? And that's usually the hardest part.
Let's take things off our plate. Hey,
Yeah.
no.
What,
You know,
because please.
I was going to say that's really interesting perspective is that they're so busy going, what am I doing, right? But they're never going, maybe we shouldn't be doing this, right? And that downsizing factor. But I think where people what I hear and what I see, maybe I don't often hear it, but I see it, is the fear mindset, right? They're like, but if I don't do what my competition's doing, or I don't do the latest greatest thing and add AI to my skill set, then I'm behind or I'm lost. And it's that fear that they're gonna miss out.
Mhm. There's two things that happen here, in my opinion. One is that fear, and that fear, in my opinion, is based on not being clear on their core competencies or strategic advantages.
Mm,
If you know as a business owner to articulate what makes this business unique, what are the core competencies that make the secret sauce, you would not chase hype. You don't need to chase hype because it's outside of your core competency. It's not where the value is being generated, really. So that's one. And the second is a lot of business owners chase revenue because revenue is easy to measure, right? It's very hard to say, whoa, I just got this amazing offer, secured it. It's a lot of money, but they view it from the lens of revenue or sales and not from the lens of profit or EBITDA. And if you start viewing stuff from the lens of profit, it becomes much easier to say, hey, this looks like an opportunity, but when I actually look at it from a profit lens, it's not really a great opportunity for my bottom line. And it's a shift.
that's a fantastic shift and way to look at things because they don't. That is such a common, problem that they do look at the revenue. Oh, top line, top line, top line. But then they don't realize what they had to do to get that, to close that deal, to make, to deliver on that opportunity, right? That they didn't realize that they had three people working on it instead of two people or even one person. And all those things add up that they're going, wow, we made all this money this year, but then how come I don't have any left in my pocket?
Yeah. Yes. So common. And it's not because they don't want to make profit. It's because it's a mixture of a mindset shift that needs to happen and a little bit more tools that help them see where profit is coming from to really be confident saying no. So let's talk a little bit about growth by subtraction, growth by addition.
Yeah,
It,
please.
the idea here that as companies grow from 0 to 1, 0 to 2, they grow by addition, right? The hustle. I'm adding more stuff, more product lines, more services, more segments. I'm just trying. I'm
More
trying to
people.
see more people, more staff, more overhead. I'm trying to see what works, right? I'm trying to find this elusive, what we call the product market fit, where there's value generated and I'm able to capture it. But as we grow, that strategy breaks because
Mm,
everything starts to be complex and expensive. So when you are at a $5 million stage or revenue, adding more stuff is expensive. Your
how so?
decisions, because you have limited amount of resources and you're deploying them on multiple different bets, quote unquote bets. Too many things, too many things to manage, and it costs. There's a cost is attention, cost is capital, cost is energy. There's a lot of output that goes into serving these multiple lines of products or services, and the shift is. In order to get from that, to break the ceiling, right? I want to get from 5 to 20. The idea is not to add more. The instinct is to add more product line, more type of segments, more type of clients. But the strategy or the key strategy of doing that truly is doubling down. It's to understand
Mm.
what is the engine here truly. So we do a bunch of stuff in this business and we serve multiple type of clients and we sell multiple type of stuff. But what is actually moving the needle profit wise, not revenue wise? And if
Mm.
you are able to articulate this, you will double down and you will start saying no in confidence. And that is the key for growth. You hyper focus on very small thing that you do extremely well. And that is the key because otherwise you become mediocre at a lot of different things instead of becoming excellent at one thing. Not forever, but until you reach the next stage where you can start expanding. The problem is they just expand too early in their life cycle as companies.
I get it now. I totally see it because, as a business owner and an entrepreneur, you want to add more things to it because it gets kind of boring. Oh, I only deliver vanilla pudding. That's it. It's vanilla pudding. We do vanilla pudding like nobody does, right? But then you want to kind of go, hey, I'd like some chocolate or maybe some, pistachio or something else in there, right? And because we get bored,
Yeah,
right? But that doesn't doesn't mean that you can't and you won't add those, but what I'm hearing is that you're securing the vanilla pudding market first
correct.
and you're getting really, really good and you're going to be known that you are the king of vanilla pudding. I don't know where I got on this vanilla pudding
I
thing.
know, but it's
Maybe I need
okay.
some pudding.
Maybe.
But then you can expand later when the opportunity arises for you to say, "Hey, the market fit says I need to add chocolate."
Yes. A lot of companies think that they got to 2, 3, 4 million dollars in revenue. I tapped it. It's like I'm done. And
Right?
especially
Nobody
if you
wants
play in
vanilla
the
anymore.
no, like I sold as much vanilla as I can, and no one wants to buy more vanilla. I need to start offering chocolate. But that's not the right approach because if you are playing in the US, 2, 3, 4 million dollar business is a baby business.
Yeah.
Baby, baby. So I look at this from an investor perspective, from a risk perspective, it's much less risky to take a model that works and replicate it in different markets or to expand that model that I know that works than to try to experiment with other business model or other lines of products or other types of segments. It's just more unknown. but I know that something is working. So how far can I take what is working and replicate it? Does it make sense?
Mm. Absolutely. So let me ask you a question. So like you mentioned, early stage companies, right? They're throwing spaghetti on the wall and seeing what sticks. They're trying different things to figure it out. When do you suggest that they start to reduce the trial and error and really dial in that product line that they're working on? Because oftentimes that's not going to happen right out of the gate.
It's not. It's different for each company. That's why we have a range. Like I can't put a number at $2
Sure.
million or at three. But
And your third
usually,
month.
that's right. Usually when that happens is it's a combination of a couple of things. You have consistent revenue that comes from a consistent base, meaning that you know that something is working consistently. And consistency is the key word here because we're trying to replicate, really, we're trying to identify what is working and double down on it. So in order to understand what's working, we have to have some sort of consistency. So would you know that you have a business that is working consistently and is cash flow positive, which is important because if it's not cash flow positive, it's not
It's
really
not
working.
working.
I'm sorry to say that it's not. If you're burning cash to acquire customers and it does, if you're in the red, your business model is not baked yet. But
Yes.
when you're in the black and something is working, profit is coming, but complexity is also creeping. And that can be
Mm.
either from your margin is getting lower, or it can be emotional, meaning that me as a founder, it becomes super hard for me to manage the operation that I've created. It can become from like we are about to expand. So there's need to be some sort of like friction point that happens.
Good
That's a
point.
good opportunity to pause and take a reflection moment and say, okay, from everything that I've built, and I built a bunch of stuff inside a $2 million business is doing a bunch of stuff. Where is the juice? Really?
Love
Where
it.
is the juice? And almost like in
Hey, quick pause here. If you've ever wondered what your next smartest move should be to grow your business, well, I've built something for you. It's called the Profit Booster Growth Map. It takes only about 2 minutes, it's totally free, and it shows you exactly where you're leaving money on the table and what to fix first. Go grab it for free at profitbooster.biz/growth map. Then come right back to the episode.
well, we got out.
There you go. We love technology. Yeah. So
It's
where's the
okay.
juice? And I have a quick question for it before I
Please.
forget.
Yeah.
So that or maybe a statement. When you start to look at these problems, right? It doesn't always mean January 1st, or if you're smart and planning October for January 1st. It means right then when that friction is coming, that's when you're going to take that pause and look at your company, right?
If you're smart. And I urge businesses, if you hear us, pause. There is an inherent incline to run because we're founders. We're building, we're hustling, we're running, 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 running. At some point, find an excuse to pause because the pause and the realignment is where the value is. So you
Mm.
don't want to just scale your inefficiency. You don't want to scale everything you have currently. Find what you love doing and what's producing a lot of not revenue profit and then scale that. It's logical. It's hard to pause, but that's where the juice is.
Uh,
That's what private equity does. Buy your company, and they strip all the nonsense, and they find the core, and they scale the core. They don't
yeah.
scale the whole business because a lot of the business is irrelevant. You want to find the core that
Baggage.
yes, it's just it's like debt, not debt in the sense of capital, but like it's stuff that you've built or you made a decision once 5 years ago to
And it's
acquire.
still hanging on your back.
Correct, and it's weighing your profit down because profit is an average game, right? So if it's just simple math, if you can find what's
Well,
weighing
it's
you
simple math to
down,
you. So hang on just a
yes,
second, because that's my next question.
please.
So you come from the M&A world and the venture capital world where you're looking at hard numbers and you're looking at percentages and averages and what is the competition doing and what should we expect in this area. But a lot of business owners know their thing. They know they know how to sell their thing, or a couple things, and they don't really get into the finances. So in the numbers and simple math may be simple to you, but it may be incredibly overwhelming to the business owners. So what could we do to maybe simplify that in a way that they can go, okay, I'm feeling the friction. I'm gonna take a pause. How do I do that, right?
Fair enough. It's fair enough. So let's I just before I went to M&A, I was a founder myself. So I built four companies. I felt it as a founder more than I felt it as a VC because I wasn't in the investing part of VC. I was in the distress. So the question is how you take that information and you put it in a digestible format. So I want to share with you how I did this.
Great.
I believe that if there is a company that has, okay, let me phrase, at a two, three, four, $5 million stage, what usually I see are companies with strong founders and some team around them so they can execute, they can make stuff happen, they can sell, they don't have an execution problem. And I also see a lot of times product market fit, meaning there's product that people love buying and repeatedly happy customers. The missing piece is clarity, specifically around their finance, strategy, and operations. So let's talk about finance specifically. I believe that if you help founders just put their information in a more digestible format, they will make smarter decisions just by putting the information in a different format.
Just being able to see it.
If you see, it's the first step of making smarter decisions is to have a little bit more understanding of what the number. It is a numbers game at the end of the day. Business is people plus math, so it isn't. It's a mixture, right? So you need to understand the math. But today, looking at a profit and loss statement, it doesn't tell you the story. It tells you a revenue story. It doesn't tell you a profit story. So what I
Love it.
built is I built like a canvas. I call it a financial clarity canvas. It's one page, and you basically put your finances into this bucket, but it starts making sense. Because all
Mm.
of a sudden, if you put in there's a calculator on an Excel spreadsheet that you can play with, but what it gives you is your P&L, but broken into a revenue stream or a type of customers or
So
type
product
of,
A, product B, product
yes.
C.
And when you start dissecting this, you start seeing themes. Those themes are worth because now we know which revenue stream will generate the most profit, not revenue, which revenue stream is the least profitable. Where in my funnel is it breaking? Is it the acquisition cost? It's too expensive? Is it my conversion? What should I fix? Just by having this information presented in a little bit more digestible way is
Yes.
like 50% of making smarter decisions because
I
founders are
love that.
rational people. They don't want to make dumb decisions. And it's not from, it's because it's just hard. It's hard to present this in a way that makes sense, that you can drive action.
Yes, to somebody like us who are business owners that are action takers and go-getters, right? Rather than they're not number crunchers, where someone who is skilled in the number crunching area can go, oh, I can read all this stuff here, and you're going, what?
Yeah.
Right? Which they know, right? And that's why they focus so much on revenue and miss the profit line because they don't know how to read the data that's in front of them. And we're not saying business owners are dumb because we're
You're
not.
not.
It's just like you said, if you spread it out in a digestible manner, then you could start to see where things are broken and where the clarity comes in.
Yes, and a lot of times they leave it for their bookkeepers or accountant to do. It's not their job. They don't know how to do this. It is your job as a business owner to really, you've built a machine. At the end of the day, it's a machine. It's a series of processes and a machine. Take a look at what's working, where it's
Yeah.
not working. And you have to be the one that does the analysis because when you do the analysis, you can really get into the insights. A bookkeeper would not give you insights.
No.
Insights are, oh, I thought that I'm serving this customer type, but I'm actually losing money on that customer type. That's not something a bookkeeper will give you. And you don't need a bookkeeper, and you don't just pause, put it in a digestible format, and just make data-driven decision. I know it's like a super vague term, data-driven decisions, but at the end of the day, if we don't have some sort of data, we're just making guesses. This is
Yes,
our
and that's where
expensive.
you get in trouble.
Yes.
That's where you get in serious trouble, especially around this kind of information. But I love that if you just break it into simple things. How many product lines do you have? Right? Okay. Product, service. Well, I deliver these three services. Okay.
Yep.
Well, where's the revenue on each? What are your cost of goods sold on each, right? What's the
Yes.
average cost that you have to fill in, whether you sell one or none, right? It's not
Yes.
that hard, but when you have a digestible, like you said, your spreadsheet that really breaks it apart, then you can go, oh, I never knew that because I didn't see it before. Now that you see it, you can make a decision.
Correct. And I'll give you
Okay,
another tip.
please.
Most business owners only look at cost of goods sold. So they look at how much it cost me to deliver, and then they take the gross margin.
Yep.
But
And then they go profit.
yeah, there are a lot of overhead that only exist because you have this type of product or serve this type of clients, and they hide in the overhead, and you're never gonna see them in your gross. I'll give you an example.
I love
Let's
it.
say that I
Yeah.
have a store and I have a e-commerce channel, and I have a brick and mortar store. And let's say that I compare my sales from my e-commerce store and my brick and mortar. Utility bills only exist in a brick and mortar location. So that's an overhead that hides, but if you don't attribute it to the specific channel, you will never see it.
That's right.
Or there's someone needs to be by the counter all day. There's labor that only exists because you have a brick and mortar. Or there's different costs that hide for that there are different costs that hide in your overhead that only happen because you are delivering on a specific type of service or having a specific type of revenue stream. People forget. And when you add it, you get true profit. And all of a
Yes.
sudden, it's like, oh, I thought this store is super profitable. But if you take utility and insurance and labor, maybe the e-commerce is three times more profit. You don't know. You
Yes.
want
And
to
we're
know.
not telling you to go e-commerce, but we're just
We're
saying
not.
that you have to look at your fixed operating costs and
Correct.
blend them through the rest of your company in a
Correct.
way, or the rest of your product line, to see where those numbers come in. I had a similar client that had the same problem. She kept saying, "Oh, well, it's just labor and products to deliver this service." And I'm like, "No,
Uh-huh.
there's
Uh-huh.
you've got this, and that hanging out back there. Where does that fit in?" So now where she thought that she had all this money and revenue coming in, when you filtered in all those other things, her profit margin was down significantly. And that's why she didn't have the money in her pocket at the end of the month. And
They
I
feel
think
it.
I think
Yeah.
that's where your accountants are incredibly important, bookkeepers are incredibly important, tax people are incredibly important. The financial space is really important, but you have to understand the role that that person is providing for the company and understand what the data you need back to make decisions. You've got to have somebody doing that data properly for you, whether it's you, a spreadsheet, AI, right? Or
Or
a
professional.
CFO maybe is in
Yeah.
that role. But you have to have that kind of data analysis so you can make clear decisions. I mean, it's hard to harp on it, but it's the reality of running your company.
Especially if you want to grow profitably. If you just want to grow sales, go sell more. No problem. Go find more sales and you will
And it's
grow.
always the more.
Yeah, you will grow more. You will have a bigger business. It will probably be much more complex to manage. It will probably be less profitable as you grow. But if you want to grow profitably and self-fund your growth, then you have to identify what is actually providing profit and value at the end of it. And if you're able to identify, which is not rocket science, I want to like articulate this. It's not rocket science. You need to pause. You need to pause. You need to do a little bit of work and kind of step away from your business and work on the business, not in the business, but like just pause for a moment. Start with beta. Again, the belief is with clarity around some data, you will make smarter decisions. It's the key. It's the beginning of smarter decisions. When I say smarter, I mean more profitable decisions. It's just base them on facts, not on assumptions.
Right. And garbage in is garbage out. So those
That's
facts have
right.
to be accurate.
And that's why I hire a good bookkeeper that actually knows
Exactly.
how to put the
Exactly.
information. But their job is to put information and catalog it, not to analyze it. That is your job.
Yes. Love it. Yarin, we can go on and
I
on and
know.
on about this topic to help business owners to really look at what they're doing in a manner of saying, this is where you should be doubling down and investing your time, energy, and effort into this lane. But you can't do that without all of the other stuff around it, which I love that you keep saying the word pause. Like I have in my calendar every week an opportunity to pause and go and reflect back on my week, right? What did I do right? What did I do wrong? Where did I miss? What gaps, holes? Where am I going next week, right? We should all do that on some scale. And like you said, if it's a bigger company and we're going to pause quarterly where we have enough data, that's what we should be doing is taking that pause and looking at the data so we can make decisions going forward. It's such an important step, and I know so many people miss that. They
If
just
they
go
miss it,
right
here's a
over.
tip. If you miss it and you don't find a time, connect the pause to an external event.
Oh,
Something happens. So either you are trying to build something new, or you're about to maybe get a loan, or you're about to hire someone. Any external event that is happening is an excuse to pause, not forever.
mm,
2 days. Pause for 2 days. Close your phone 2 days and just walk through the steps and come up with better decisions.
love it. So where can listeners find out more about you and how they can pause?
Yeah. So basically, what we talked about today is the financial component. We talked about clarity, and there's financial clarity, strategic clarity, and operational clarity. Most companies focus on operational clarity, right? That's EOS, that's like processes, meeting, KPI, scorecard. The real value comes, in my opinion, at specific stage from the strategic clarity. And that
Mm,
happens after you get the numbers before you decide what you're going to do, right? So I basically took all my learnings and I put them into a private equity playbook, a playbook, basically a series of steps that if I came into your company and I bought your company as private equity, this is what I would do to make it more profitable and to increase its value. And instead of pushing it down their throat, I'm opening it publicly. It's publicly available for free. So you can just take it. It's at playbook.fractional.partners. And it's basically a step by step. It's open. You can do it yourself. You can do it with your team, or you can do it with me leading it. That walks you through the process of how do I get financial clarity? How do I understand really where profit is coming from? Then what exactly are we doubling down on? Who is
mm.
our single segment for the next 12 months? Is our single revenue stream? What are our core capabilities? And creating this one-page source of truth that we call strategic clarity canvas. And only then we end up with the operation, which is what needs to happen next quarter.
Love
It's
it.
available. It's free because I feel knowledge should not be gated. It should not be gated. It's there's no secrets. There is no secret. So anybody that tells you secrets, there aren't any secrets. They're just no. They are activities and things that needs to happen to increase the profitability of your business and the value of your company. It's not rocket science. Follow the steps. You can do it yourself. If you need me, I can help with that. I basically facilitate this as companies grow and I help them implement this, but they can do it themselves. And just better decisions plus clarity equals growth, profitable growth. It's not rocket science. It's pretty simple but not easy
But
equation.
it's simple once you know how to do it. And it
Correct.
sounds like this playbook is giving you the step-by-step path on how to do this.
Yes.
Love it.
Yes.
Love it. All right. Thanks so much for tuning in today. I hope you picked up some valuable insights and actionable ideas that'll help you make your business more profitable. And the word is profitable, not revenue
Profitable
generation and
growth.
sales, profitable.
Next time you come into a sale, ask yourself, what is the actual profit I'm going to take out of it? That is the question. We're not in the sales business. We're in the profit business.
Love it. Exactly, exactly. Great, great, great information. All right, so before you go, if you're ready to bring in more of the right clients and keep more of what you earn, go grab my free Profit Booster Growth Map. It'll pinpoint the top 3 moves to grow your revenue and stop the profit leaks fast. It's all what we're talking about, and it's definitely something that'd be very easy and supportive of Yarin's playbook. So I would encourage you to go get both of them. You can go grab mine at profitbooster.biz. And don't forget to subscribe. You don't want to miss future shows. You can always find Profit with a Plan on any of your favorite podcast platforms. Looking forward to more profitable strategies on next week's show. So until then, make your plans and profit with them. Thanks so much, Yarin.